Started streaming. Okay, hopefully you guys can hear me. Let me see. I should probably audio in. I'm going to do the built-in microphone on that one. The podcast is going to sound a lot better. Maybe I'll just update that. But I'm going to start the podcast now. Let me just make sure. Hold on one second. I want my phone. There we are. Just to make sure. Yep. I'm live. Focus, do not disturb. There we go. Okay, now I got to start let me make sure on OBS that, yep, perfect. We're going to expand this a little bit more. And I don't want to bog my system down. The reason why I haven't been doing Active Trader Pro screen share while I'm here in New Jersey, it's just my MacBook can't handle it. It's been taking a beating, if you will, just with the memory resources of what I have now. Okay, we're going to do... And then I'll go back to the Dow. I know what I'm starting the... Look at that. Microsoft. Wow. Okay. You're going to hear dogs barking in the back. DJI. Is it DJX? Yeah, there it is. DJX. Oh, I gotta put this on the pad. Okay. Sorry, I'm just getting set up. There we go. We got this on the pad now. Perfect. It's a little bit floating. We'll put that down there. Okay, now let me see. I think I've got docs. Chat. Good morning. Why is it not hooking up? I think I'm live. Let me just make sure. I'll go to YouTube. YouTube.com. There are my notes. Let's go to OBS. There we go. Hey, Zephan. Okay, I don't have to go to YouTube. Now I know the chat's working. Okay, DJX. That's what we're going to start with. Now I got to start the podcast. It's Monday, September 26th. Good morning. It's Monday, September 26th. And I waited to actually do this. I'm going to bring this down a little bit. I waited to do the podcast until the market opened because it's been crazy. Just crazy. I'm going to bring this gain down a little bit because I think it's still a little too high. But the market is going nuts. It was down 200 points. It's now down 79, 78. The NASDAQ, I think, is winding up positive. But what I wanted to start out with was a look at the Dow Jones, because the Dow Jones, you can see here what I did was I brought this is a 4-hour. We're obviously in a downward trend. There is no doubt about that we're in a downward trend. When we start back up the upward trend, Lord knows. But what I wanted to look at was a weekly, because the weekly clearly shows we have given up all of COVID recovery, I should say, right here. So see that line right about 294? This is February 2020, right before COVID hit. The Dow is now back to the 200-day. This is a weekly chart, and we've given up all of the COVID losses. which we gained back and fivefold some. And we've come back full circle. So you're back to February 2020. If you were in the markets for the last 2 years and you were just in an indices fund for the Dow tracker, you've basically just lost all of your gains from the last 2 years. That's what the markets do. That's what 2000 did. 2000, it took 10 years to get your indices back to where you were. I kind of showed that one. Let's see if we can go take this back to 2000 because it really was a dot bomb. It had less to do with the Dow and more to do with the NASDAQ. But clearly, we're having trouble with this market getting a catalyst. And Jerome Powell, the bonds, one of the subscribers that wrote to me last week said, hey, I got to look at bonds. And I do have to look at bonds. I saw a chart this morning on CNBC that said millennials, 50% of millennials have taken profits during this time. Only 20% of boomers have taken profit during this time. So, again, I've said buy energy, sell on the way down. Make sure that you're buying low and selling higher, taking profits when you can. But that's the main thing. I wanted to show you that we've gone all the way back. It's done a complete round trip. Energy sector. I'm kind of just going to go over the stocks that I own. They've come completely round trip. Devon Energy is back under 60. You can get it for $57 today. I've said buy this one under 60, sell it over 60. I think I moved that to 70 while it was flying high. There is no reason this should not continue to go up. It has, you can see it's clearly fallen. That is the recession fears. That is Jerome Powell killing the market. The RSI is at 24. These things are completely oversold. There is no reason you shouldn't get into this energy sector because with the emergency reserves depleted, not to the point where they're at zero, but at the end of October, those emergency reserves will not be distributed anymore. So the price of oil will go up because right now America is keeping the price here down. When will they fill them up? Well, oil's under 80. So when they start buying and they stop supplying, what do you think is going to happen from a market perspective? Now, if the Fed continues to hold their rate increases hostage, then you'll start to see some demand destruction. But I can't imagine buying this one at 56 and not enjoying some of this gain up. Chevron, another one that's been beaten down. CVX. Let's put that in there. I'm sorry, I'm in a crammed space at this time because I'm still doing it just on. I haven't completely figured out the whole setup here yet. And again, my resources on this machine are severely down. Let's pull it. I'm still trying to pull up Chevron. This is not an indication of TrendSpider. This is an indication of my machine, which is a 2015. By the way, I'd like to see a PC from 2015 that's still working. This is my Mac on a current operating system, I should say, without any upgrades that you have ever done to it. That you just bought stock, just a base level 2015 machine. That's what this is. That's why you buy Apple. What is this, 7 years later? And I think I just actually passed just 2 days ago the 7-year mark. 7 years for a PC is way too long. 7 years for a Mac is not too long. You can still use it effectively. But Chevron down at 142. I think this goes back to 160. I think it's easily a $160 stock. Now, do I buy these here? Probably not. They just haven't shown any confirmation of purchase. Oil is continuing down, so I would not buy it. Dan Niles was on this morning, and 3 things that he said. He said, The energy sector is good to buy now. Well, I just don't think that it has turned around completely. He said Walmart is a defensive stock. So let's take a look at Walmart. I do own Walmart, as you guys know. WMT. Oh, come on. And again, the resources on this thing. WMT is Walmart. I own a small position in this. It's at $129. This is a $140 stock. That's just kind of, again, in good, decent times, it's a $140 stock. If you have money and you're putting it out there, Walmart's a good one. What do they pay in dividend? Let's see. I wouldn't buy it right now. Again, you're still in a downward trend market, but you want to try and find these things that are long-term in this downward trending market because, whether it takes 2, 5, 10 years, you want your long-term stocks to work for you. Walmart's down 10% year to date. The 52-week high is 160. It's 20% off that. It's only 10% off its 52-week low, which is 117. It pays a 1.72% dividend. It's a great stock. Great stock. He brought up healthcare as a defensive. United Health, which I haven't checked in a couple of days, but let's look at this one. UNH is the symbol. And this one is, we're pulling it up right now. Boy, it's slow. UNH is down at 504. Remember a few days ago, I said, if you can get this close to 500, get it. I think 500 isn't a crazy thing. You can see it's in a downward trend. We're heading into a recession. This is an expensive stock. So it's one of those that you put in your portfolio and you just sit there and you kind of just take the downturn with it. I wouldn't buy it right now, even though it's down. The RSI is still at 37. I just think that we have more downturn to go. This isn't over with. So I'm being very careful in what I'm recommending to you because we are so far down. If I were to look at the SPY, I'll show you kind of the indices that we look at. The SPY is a heavily traded S&P tracking fund. This one will tell you whether you should get into the market or not. That's a downward trending market. It's super, super clear we're in a downward trending market. So what do you do in a downward trending market? You be very careful as to what you buy. The RSI on the SPY is 28. There is no upside whatsoever. That MACD is well below the strike line. Even if you were to see a bounce, all that's going to be is a bounce. I think we still have a 10 to 20% downturn in this market. There's no good news. If Powell sticks to his script, I think it was Friday or Thursday or something, Fisher, who was on CNBC, he said there was a picture recently of Jay Powell's desk, and he had Paul Volcker's autobiography on it. Well, if you want to be clear, Paul Volcker's biography, Volcker was the one that killed the market in the 70s. If Jerome Powell is doing that here in the 2020s, he's kind of been that model. So I wouldn't buy it. But what you can do in this market is play the inverse. And I've had several listeners reach out to me and say, hey, thank you for those inverse ETFs. You've got an inverse SPXU, which tracks the SPY, but it's triple levered. SPXU, I believe that you're still in this one. Let's take a look real quick on the algorithm to see what it does. SPXU, you had a buy-in here. It was, wow, did it get you out there? It got you out there. It's still thinking. By the way, on my MacBook Pro, the reason this is taking so long is because I am live on YouTube. Subscribe to YouTube and set up the alerts like Zephan does. September 15th, the buy-in at 18. Yeah, 18.18. You're at $20 right now. God, what is that? Was I in Pasadena? No. September 15th. So what, 10 days? You've made 20%, 10%, somewhere in that neighborhood in a downward market. So SPXU is one. Another bear is SQQQ. Let's pull this one up. But like I was saying, I am on YouTube and OBS, which is the software that I use to stream live on YouTube. That's what's taking up a significant amount of resources on my computer right now. So it's slowing down the podcast a little bit. But what you guys can do is, while you're listening to me, pull up the charts as to what you're looking. If you're listening in a car, pause the thing and just hit a note to look up the chart. When you get to your office or when you get back home. SPXU, the September 16th, 49.67, you're at 53. 10%. You've gotten your 10%. Another bear to go along with kind of the downward market. And again, it's a downward market in terms of the high growth names. As the bond yields go up, and I'll take a look at more bond funds, and maybe I'll scan some things on bond funds. But SARK, this is an inverse of the ARKK, Cathie Wood's ARK fund. It's the flagship fund. 56.20 was the buy-in. And again, this average win is 20%. But you haven't hit your 20%. On September 19th at 56.20, today it's at $60. 10%. Again, you've got all of these tools that you can use. Now, during the upturn, you want to use your bulls. You want to use UPRO. You want to use SPXL. You want to use TQQQ. And one more short. SOX, which does the chip sector. SOXL is the long. SOXS is the short. And these are triple levered, so they're going to move big when they do move. SOXXS, try saying that 10 times. SOXS is the short version. And this one has had quite a run. The average win on this one is 21%. And it's because it's been in such a bear market, the chip sector. You go way back to August 5th. There was a buy-in at 35. You're at 61. You've almost doubled your money within a month if you were short the chip sector. So that's what you're doing in this market. And again, I want to be kind of careful about what I tell you guys, just because I don't think anybody should be buying in this. Whatever upside you see today, it's simply a bounce. Make no mistake about it. Try and point to me that there's a positive trend in the market. And I'll point to you, you're wrong, because you're just wrong. There is money to be made on the bounces, but those are your short-term ones. What you should be doing in this downturn market is adding to your longs, and add it in companies that you're positive of. If we take a look at Apple, it's a good AAPL. It's a good indication. So, like I showed you, the Dow has gone all the way back to February of 2020. Apple, you would not be in today just because the MACD has not crossed up. It is up 1.4% today. It is a stock that is probably going to rebound a little bit just because it's so oversold. The RSI right now on the algorithm is 39. It had you out on Friday, so it doesn't have you in right now. But let's take a look at the weekly of Apple so that we can see where it was trading pre-pandemic. And Apple and Tesla are two good examples. Tesla is one that absolutely 100% should not have held up, but it has absolutely held up. So you go back to this February right here. Apple was trading at 82. There's a clear volume shelf right there, right at 82. It's a support level, but you haven't broken this other support level about 135. That was where the June lows were. So in order for the NASDAQ or the S&P to really come down, the S&P is what Apple will need to come down. But my belief is it's not going to. Dan Niles does think that it's going to. My personal belief is if you get Apple in the 130s, load up on it. Right now it's at 152. 152.43. So I want you to add to your long terms. Google, good example. Let's look at GOOG because that's the one we buy. Because remember, when Google does their buyback, they buy GOOG. They don't buy GOOGL. And when I've looked at it year to date, GOOG has actually outperformed GOOGL by 1%. So GOOG is probably what you should be adding. Now, I don't think that you should add it right now because look at that MACD. It's down. If you want to add long-term to it, under 100, I think you're fine. But if you're looking, anytime for a buy signal, I don't think now is it. But if we go to the weekly on GOOG, and let's see where it was trading pre-pandemic. We go back to February, and it was trading at 71. Again, that's kind of probably where some of these stocks may be going to. 99 to 71 on Google. I would load up on Google at 71. Again, I'm a obvious skewed tech investor, but I think that's a great one. Dan Niles also said, by the way, he would be adding some of the gambling names. They added Penn on Friday. And he said exactly what I said. Hey, play the bounces, trade the bounces, but don't get out of the market. You want to be in this market. I'm going to cut this one short today. It's my dad's 80th birthday. Everybody should be so lucky to live to 80. But the one scan that I got, I did scans this morning. And the one scan that I got was HD, Home Depot. For some reason, this one is trending back up. And I don't know why. I don't think that the real estate sector is healthy. The RSI is at 28. It's probably a dead cat pounds. If you wanted to play something a little bit longer, I hate to recommend this one because it's been on such a run, but DRV has just been a killer for anybody that put money into it. DRV 46.85 was the buy-in on September 15th, and you're at 63. God, what's that? 20% DRV. 20%. You've had these swings. The average win on DRV is 11%. So the last two that we've gotten into have just been tremendous winners. But again, 47, 63. I don't want to say buy it at 63 because the RSI is at 80 and that MACD is super up. But Home Depot had a cross up. I don't know if it's bearish. I don't know, if this is just a bounce in a bearish market. I don't think that it's a bullish market. I think if you want to buy Home Depot for the long term, I think you're good. But it's a well-run company, great revenues. The housing market may take a downturn. If that so happens, what we saw in the last housing market downturn was that people fixed up their houses and that Home Depot actually benefited from that. So if you have any questions, hit me up on, I don't see any more chat, so I'm going to stop this one. But if you have any more questions, hit me up on Twitter. Hit me up. There's a link to Linktree down below. You can hit me up on any of the socials that I have, Twitter or Instagram. Hit me up on, make sure you follow on YouTube to see all the charts that I look at. And, again, remember, even in a downturn, you can make money. You can do it. I would say if you're not losing money in this market, you're probably not set up right, meaning that you should be losing money in your long-term portfolio. Like Dan Niles said this morning, you can make money if you're willing to trade your entire portfolio, but nobody's willing to trade their entire portfolio. There's tax implications. There's, you can't time the market. You're never going to do yourself any good by that. So play it careful, play it safe. I think you add quality companies. I think you play those inverse indices. I think you do those types of things that are good for your portfolio. Use FinViz, use TrendSpider or any charting software that you want. If you have any questions or need guidance along the way, absolutely just reach out to me. And thank you to, I think there were 3 or 4 this weekend, people who actually signed up for Visible service. We're going into a recession, make no doubt about it. So living cheaply is going to be a need. And Visible service, I've had it for the last 2 months. It is by Verizon. It costs me $25 a month for unlimited 5G service. I was just at a stadium, the Rose Bowl, 80,000 people. My service worked fine. Didn't have to connect to Wi-Fi. I was, I think I was de-speeded, or however you call it, a couple of times. But again, I think the cheapest Verizon plan is like $70 a month, $80 a month, versus 25 for less than 1% of the time, when I can't get everywhere you get service with Verizon, you get service with Visible. Just you're put behind the Verizon customers who are paying more. But honestly, I'd rather pay less if save your money. So thank you for those 3 or 4 subscribers who signed up for it. The link is in my link tree. I do get compensated for that, but you also get compensated for it, and that you save $20 per month. So your first month, it's normally $40. If you want to join a party, I've got a party code that I can provide to you. Hit me up on the socials and I'll provide it. But it goes down from $40 a month down to $25. Again, on the party plan. So let me know if I can do anything for you. Hit me up. Trade carefully. Just to understand, we are in a downward trending market. Until that turns around, I don't think there's anything that you should responsibly bet on. There are some companies that you can find, and if you find them, let me know about them. I have been ignoring some of my messages on social media just because, again, I've been traveling. I got in late last night, and today's Dad's birthday. So, again, if you have any questions, hit me up. Okay? Take care, guys. I am going to stop this one now. I'll see you tomorrow. Okay, Zephan, if you're still there, I'm going to hop on YouTube. Let's hop on YouTube. YouTube. There we go. I think you're the only one that chatted with me. I'm trying to be a little bit more responsible and not telling everybody to throw their money in. But God, you guys who have listened to me, Qualcomm 122. God, I hate not recommending that one. I hate it. Absolutely everybody should be in Qualcomm at 122. How to get 1,000 subscribers on YouTube. I don't want 1,000 subscribers on YouTube. I wouldn't be able to respond to everybody. Let me export this. I think it's going to kill my resources. And I think I'm using the external mic on here. There we go. I'm going to hit the thumbs up, and then I'm probably out of here. Boom. Hit that thumbs up, Zephan.
I hate it. Absolutely everybody should be in Qualcomm.
Great pod today. I hate telling people not to buy, but that's the right thing to do. Just be patient. Zephan, you'll laugh. And anybody that listened up to this, I had a couple of subscribers hit me up with, you've got to tell me what to buy. I can't tell you what to buy, man. Don't listen to some moron on the internet. That's not how you do it. Okay. I'm out of here, Zephan. I appreciate you, man. I am showering and I'm heading out with my dad. I will talk to you tomorrow. I'll definitely have a pod tomorrow, depending on how the market winds up. We're still in a shit show. It's bad. So, okay.